Hi, this is Sive Morten with the daily update on EURUSD. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. So let's continue to discuss the euro currency situation on the daily time frame. As we said on Friday and in our weekly research, that market now turns to some retracement since it has hit some support level, and since we have solid momentum to the downside and the supporting fundamental situation that supports US dollar, well, probably market should continue to move to the downside. Besides, our long-term expectation is 116 area. So we could say that probably the downward move on that is continuing on the monthly time frame. Now reestablished again, and we need some rally to sell and to join this downward trend that is ready to continue. So recall that we have discussed a couple of levels. The first level, resistance 128.03, that is the first 3-8 resistance. Right from that gap, from this high to that low, 3-8 resistance right here. Market has hit it and slightly penetrated. That is also the weekly pivot point area. That is the first area to watch for, to establish the first part of your short position. Our preferable and major level to watch for is right here. It's 128.86, 129.03. Daily confidence resistance, that is also includes the weekly pivot resistance 129.07. When the market stands in the long term solid bearish trend, when it starts to retracement, it usually retraces to the weekly pivot resistance 1. And that's why this level is very attractive from the perspective of entering on the short side of the market. But current price action nowadays is very complex, and retracement develops usually a bit in a complex way. So it's very difficult sometimes to predict where market will stop and from which level it will reestablish the downward position. That's why in recent times I mostly recommend to possess our sells and to enter the market gradually. So it means that maybe it's not a bad idea to take some small position right in the nearest level and add most part of the position around this confidence resistance, because if market will stop in this area and will continue to move to the downside, and if you will wait only for that level, you could skip the entry point. And from that perspective, if you do not see any clear price action on the intraday chart, that will definitely point on some level. In this case, when the price action is choppy with the retracement on the intraday chart, in this case it's probably better to apply the gradual entry. So to have, for instance, 1/4 of your position from that level and wait reaching with that level to add the rest. Now, what risks we could get on daily time frame? The first risk is that market could create the double repo buy pattern. The difference of these patterns consists of the moment that double repo pattern is the short-term reversal pattern, while bread and butter trade is continuation. Both of them needs solid thrust initially, but the price action after that is different. While bread and butter trade suggests deeper penetration of this move, deeper retracement during the first move to the upside and crossing this green line, that is 3x3 moving average, closing within 1-3 days and reaching some significant area, for instance this 129, and then continue move to the downside. Double repo pattern suggests slight penetration, and it will be better if market will not reach any significant target, then closing below the green line again and closing above it. If market will show the second close above it, this will be the triggering bar, the confirmation bar of this double repo, and this could lead to deeper retracement. This could lead even to retracement, for instance, to the 618 resistance 130 30 area, somewhere right here. That's why this is one of the risks that could appear on the daily time frame. So monitoring the price action with this first penetration and developing the situation on the intraday charts is extremely important currently. Anyway, if even market will start to form this double repo pattern, in this case you will be able to protect your position even if you will enter short right from that area, or even to take some profit, and the market will start to move again to the upside. So that is particular very important moment, and it worth it to be monitored on the current week. On the 4-hour time frame, what we see? We see that current price action, if it will proceed to the upside, creates the agreement with the confluence resistance, daily confluence resistance area, because this is the 100% extension of that pattern. A, B, C bottom, 100% extension. You can see that right in this area stands the gap, and probably market could make an attempt of closing this gap, nearest gap on the 4-hour time frame. Also take a look that weekly pivot resistance 1 stands slightly higher than both of these levels. This gives market some room to proceed a bit higher, to show some shallow penetration of that level and close the gap. So that's particular very important and perfect level to search for the possibility to enter on the short side of the market. Well, but as I said, one of the risks that market could reverse right from that level and continue move to the downside. We can't exclude that. So on the hourly time frame, what do we see? Market is forming some kind of the bearish wedge. You can see also this nice bearish divergence with the price action and the MACD indicator. Well, what could appear on the hourly time frame? Treating this price action as a free drive is a bit difficult, since if you will build an extensions of that swings to the downside, you will see that it's a bit lack of harmony in the development of these swings. So it's very difficult to treat it as the potential free drive. Also, this could, here we could probably get some butterfly, small butterfly pattern. We can exclude that, but in general it's very difficult to say will market reverse right from this wedge to the downside and continue move to the downside, or market could show some upward breakout of this wedge and reach that level of resistance. Based on the daily time frame or based on the hourly time frame, it's very difficult to predict. That's why our trading plan for the current trading session is follows. First of all, enter with small short position from that level. If market will start move to the downside and will not reach this level of resistance, move your stop to the break even, since market could act twofold. Our preferable scenario, if market will just continue move to the downside. If market will start form the double repo reversal pattern, that it's better to exit from the short position, take some small profit, and wait for the deeper retracement after the confirmation of the double repo, of course. Well, if market will proceed higher, we could hold this position since its value will be relatively small, and add the 4/5 of your position or 3/4 of your position right from that level. That's seems as the solid trading plan that could be applied in the current environment. So our major focus, as I said, is the monitoring of the price action within this retracement and how it will act in the current week, since here we could get another pattern that will be reversal and could point us on some deeper retracement to the upside.